Hello, it's that time of the week where we go over the watch list and I will show you what I'm looking at for the week ahead. There's no camera in this video. I'm currently traveling, so this video won't be edited really either. We'll sort of just go through it as a more of a sort of raw video, if you will. So first thing I'm going to cover is gold. Now, gold's in an interesting spot because I do still remain overall quite bullish on gold. The problem is, at the moment, is we've broken out of this 9-month ascending supporting trend line. So you can see this started back in February this year, and now in November, it's just managed to break out. Will this momentum be able to continue? I'm not sure. We're not really at a major level of support or resistance at the moment. I guess we're at these previous lows here. But due to the recent heavy sell-off and I guess the sort of general disrespect we're seeing here towards technical levels, it wouldn't be a surprise to me if we do see sort of 2480 on the horizon. And this would also now be a mean reversion. So if you guys have been paying attention to what I've been saying over the past sort of 2 or 3 months, I've been very cautious of mean reversions in the markets at the moment, or for sort of the rest of the year. And that is kind of what we're seeing now. So gold will be a lot of profit taking. Obviously, there was the sort of election fears, and now Trump's in power. There's potentials there for sort of the wider global tensions to maybe start calming down next year. So again, that will lead to possible profit taking. We are also seeing the dollar on a pretty strong move to the upside. It's been very relentless, really, towards anyone that's bearish on the dollar. Bulls have been doing very, very well. So if we look at the other currencies here, we've got the euro, the pound, and the yen. Look at the pound and the euro charts. There's just no relaxing here, really. We've just been really, really strong with sellers, and we've been in a seller's market really since the 26th of September on the euro and the 26th of September for the pound. It's just been a bear cycle, really. So if we go ahead and have a look at euro dollar, you can see here what I've been doing. So these are all active positions. I'll show you on my MetaTrader here. So these are all just 0.1s, but I've managed to scale in 7 times. So I'm in quite heavy, or relatively heavy, on euro dollar shorts. So in terms of targets on euro dollar, I've got a first target here at the 1.05 level, and this was rejected previously. So you can see this was the lows of October 2023. So essentially what I'm looking for is a break of this level. If we can't see this level get broken this week coming, then I'll be looking to close out of these positions here for obviously quite a nice profit. However, really what I would like to see is an even lower level on euro dollar. So I'm actually looking more towards parity. So if anyone doesn't know, parity is just 1. It's just 1.0. Now, I'm not sure if that's a realistic target to have, especially in the short term. It is very ambitious. Now, I'm not saying this is going to happen. It's just something I'm looking to sort of keep an eye on. If we can continue to see this daily chart breakdown, then into next year, so into 2025, the parity level might come into play if we can continue to see the same economic drivers in the markets that we're seeing at the moment, with the weaker Eurozone data, aggressive ECB cutting, and a more hawkish Fed. And obviously the Trump trade is still in play with this dollar strength as well. So for anyone that was here in my previous 2 weekly watch lists, now pound yen isn't really on my watch list anymore. Just because my focus is basically just on the dollar. I'm capitalizing on that at the moment, and nothing else is really worth distracting my attention. However, what I was talking about previously was a short position on pound yen at this level here. And the reason we're basically looking for potential inflow into the yen as a safe haven, and general weaker data towards the UK, which isn't at the moment really supportive enough. So this is why this trade has been scrapped. But again, if you followed that trade, you will now be in profit. But it's not something I'm paying attention to anymore. So NASDAQ, also I was looking at shorts on the NASDAQ last week, and this was more of a long-term view with possible overvaluations and tariffs from Trump and AI regulations and things. However, again, that was a long-term outlook. So this, couple of days of sort of bearish momentum isn't enough for me to get into this market yet. But again, I don't really short the indices markets. It's more of a a cautious watching rather than trying to get into these shorts. So we're just going to take a quick look back at euro dollar here. This is the MUFG position. So if anyone doesn't know, MUFG is an institution, and we get their bank reports put into our Discord. So they were in this position, or they announced this position, I think it was last week or the week before. And it looked a little bit like a desperation trade. So obviously we don't know if they're in previous positions, if this is scaling. We don't really know the context behind this. However, just from on face value, this seems like a bit of a desperation trade because they missed, or it appears like they missed the whole move and then got in as soon as they saw any sort of pullback here and got in late on this pullback. You know, the R&R is not great. Obviously, you know, I'm talking from a sort of a retail aspect here, but the idea is still there. You know, there's institutions still short euro dollar, and there isn't really any saving grace there. So for the Australian New Zealand, what we've got is essentially what I was talking about again last week. I was talking about going long within this sort of area where these two orange lines are. And so far, we've actually not really seen too much movement here. We saw a quick pop up, but it didn't really lead into much. Now, I'm still relatively bullish on this pair. The problem is I'm just cautious about the Australian dollar. Now, Trump's in power because obviously we're getting tariffs and things. It will affect China and affect the agricultural commodities or even just general commodities, and then in turn affecting the Australian and the New Zealand dollar simultaneously. So we've got the US dollar, Canadian dollar. By the way, I apologize if you can hear background noise like cars and things. Hotels just next to a main road, but there you go. So the US dollar CAD trade is interesting. So I'm going to show you this chart here. So this is what I use for sort of gauging mean reversions. Now, I actually don't use this chart very often. I don't really think I've shown it much on my channel. So what this is, it's the Bollinger Band with the length of 200, obviously EMA, that's what I always use. And essentially, the way a Bollinger Band works is it shows the average range of a market. Now, generally speaking, when we break out of this range, we will see a natural reversion back into the sort of average price of the market. So you can see historically when we hit the top of the Bollinger Band, we come back down again here and again here. And it can happen in situations like here back in September 2022, where we break above and we continue this rampage above, and then we start pulling back in and create sort of a new average range, if you will. So I'm just a little bit cautious on dollar CAD because the fundamentals are very bullish. So obviously we've got the pretty strong dollar. I don't think I don't think anyone can argue that the dollar's been on a huge run, really. And this has been since, the 27th, 26th of September, like the euro and the pound started their bearish momentum. We do also have quite a convincing oil market to go short as well, which also affects obviously the Canadian dollar. So if we're looking for a weaker Canadian dollar, which is very likely with weakening oil prices, and we're looking at the dollar doing very, very well, then the US dollar CAD still has potential to run to the upside. So if we're looking at sort of next levels, really, it seems like we're on pretty safe ground to say that we'll be hitting 1.46 quite soon, potentially towards sort of December. Now, obviously, I can't predict the future. I don't know if that level will get hit, but if we continue this momentum, there isn't really any traffic in the way of the market hitting that level, sort of 1.46. So again, if we go ahead and have a look at the oil market here, there is potential for it to continue to the downside. So we'll see how this trade develops. So I'm looking first of all at $60 a barrel, and then if we can continue to see the breakdown, we'll be going towards the $50 a barrel level. So just to give you some insight into this market, the research I've got written down here is despite OPEC plus production cuts, oil prices face downward pressure from weakening global demand, particularly in Europe and Asia. The shift towards renewable energy and increased EV adoption is dampening long-term demand for crude oil. Additionally, a stronger USD is making oil more expensive for importers, further reducing demand. Rising inventories in key regions also contribute to a bearish outlook for oil prices. So there you go. It's, there's not really any bullish factors for oil at the moment. And as I said, Trump is also playing a part in that. So Oil and CAD seem pretty bearish on the face value of things. We've got the US dollar doing very, very well. I would not like to be trying to short the US dollar at the moment. Something you do need to pay attention to, though, if we go back and have a look at previous election periods, let me just reset this here. So you can see there's normally an initial reaction on the dollar followed by a counter reaction. Now, it might sound obvious, but it happens almost every time. So again, we had our initial reaction here. We saw the dollar rise 5%, followed by a 14.25% drop. Same back here in 2012, we saw a 2.64% drop, followed by a 5% increase. So we just need to be careful that we don't stay long on the dollar while we have a possible reversion or a possible trend change on the dollar, as we typically do after an election. So whether we're having our sort of initial push now, and then we will see possibly our sort of pull back to the downside on the dollar. So if we look at the candles here, we do still have a quite a large market gap on the dollar down here. So this was as we had this US election. You can see with the market just gapped up. Now in FX markets specifically, if you look at a stock market, you'll see a lot of market gaps that sometimes don't get filled, or at least don't get filled for a long time. It's not always the same with FX. We often see FX gaps get filled within at least a few days, normally, or sorry, at most a few days, and we have not seen that yet. So I'm still just very cautious, paying attention to if we do start seeing weaker data for the dollar, just be very, very on it. If if we do start seeing that dollar trend begin to change, we need to be adaptive. So next up here, we have got the dollar yen. I think this is probably the final chart really for this week. So what we've got is a very clean uptrend on the H4, and we've got this really nice level of structure through here. Now this also lines up really, really nicely with our fib level. So I am very tempted to take this one to the long side. So we've got our stop loss below the previous low and a take profit potentially just back at the previous high. So this was just before we had, or just as we had the carry trade unwind or the market flash crash. So again, we're playing really the dollar strength into a weaker currency like the yen. The problem is really, though, are we going to see an intervention with the yen? And it's very likely. So with interventions, the point is to just slow down the depreciation between the dollar, slow down the depreciation with the yen, rather than trying to change the trend of the yen. It's just just slow down the depreciation overall. However, what we've seen is pretty drastic, really. So if we look at the yen, we had a huge rise. The yen did very, very well for a short period of time, really. And now this move's almost been fully corrected. And it seems the bears within the yen have come back in full force. And we're now seeing the yen start to lose quite significant value all over again. So it wouldn't be a surprise if the MOF, which is the Ministry of Finance in Japan, come in and do another intervention to help support the yen. Whether that will happen, again, you can't really predict what the MOF is going to do. It's very difficult. So we will see how that goes. Obviously, like I said, we can't say for sure if it will happen, if it won't happen, and if it does happen, when is it? Again, don't know. It's just something, again, if you are trading the yen, you need to be aware of the risk there associated with this trade. However, overall, despite that one factor, the dollar yen does seem like quite a nice position to go long on. So guys, that's it for this week. Again, apologies for sort of the, I guess lazier approach to this video. But again, I'm away, so next week we'll be back to our normal, which is a bit more edited and a bit more clear and easy to understand. Anyway, guys, if you want to join the Discord, follow our signals and get some education and bank reports and things, click the link in the description. If not, have a great day. I hope you all enjoyed your weekends, and I'll see you very, very soon. Thank you for watching.